Okay, everyone, welcome back to Premier Studying and Investing. Hey, we're super glad to have you. We're continuing our quest to find different, COVID therapeutics that are, hopefully, at least this one is, not IV delivered. This is OPKO Health Incorporated, ticker symbol OPK. You can see the chart on the screen, trading at $3.64. Nice run up in August, like many companies. And then we had some bad news. We're going to look at what happened. Continue to bounce back, and then now we're back down at this support level. I'll let you look at this, and I'm going to say a little something. One of the ideas with going into all these small biopharm companies, looking at different drugs related to COVID, was that if you go to like Bridgewater Associates, if you listen to Rayaldee, they've done some reports about GDP and how much that's been affected by the lockdowns or the stay-at-home orders or the lack of spending or all the different industries that have been affected, and they say that, 20%, 30% drop in GDP in some quarters. If you have an $80 trillion global economy, some people put that as high as 100, but, when you have say a 4% hit on that, it's $4 trillion. If you have a 20% hit on that, it's $20 trillion. So that's one of the reasons I'm looking at all this, because in general, healthcare is very defensive. It's a good thing to get into when the economy's down, because people will put off buying a newer car, put off getting a new washing machine. They might put their kids in public school if they have to, take them out of private for a little bit. But if there's a healthcare emergency, you're going to pay for it, pretty much. It doesn't matter who you are. If you have the means, you're going to pay for it. So we're looking at a company that's about $2.5 billion on the market cap. You can see that the earnings have been negative. They have sales, and this is important. I want you to notice this, about $1.2 billion with a B. 1.2 billion. My guess is that most of y'all have come here because you heard about the NFL, the National Soccer League, the NBA, and you heard that BioReference Lab is handling a lot of those things. It's true. It's true. It's true. But we're going to jump into it. One thing I've not been able to find is, are they able to make any licensing deals with the Saliva Direct coming out of Yale? That's where I saw those two things connected, and that's why I originally got into it. But it's not really the case. The other things I'll point out before we move on is the short float, 32.6%. That's going to be a big deal. It's going to come up in one of our articles, trying to explain why there was a 16% drop in the share price. And then a lot of volatility. Big. So negative returns, but big jumps in EPS, either largely negative or very, very positive. You can see that with the sales as well, quarter over quarter. All of our analyst information is old. We can go back and see some of the highlights. Plus 6%, down almost 17%, down 6%, down 12% in October. So, that's a pretty wild ride. Let's find out more about what's going on. One thing, jump right into it, Rayaldee. That's a cancer drug. No. This is not a cancer drug. It's a kidney drug, okay, that they have already on the market. They're making money. It's selling, I think they're making about $8 million of profit per year on that. They got a couple licensing deals. But Rayaldee is being investigated for treating mild to moderate COVID. We will see that they're in phase 2. They already know it's safe because, they already have it on the market. But now they're trying to find out what's its effectiveness. Like I said, one thing I like about it, 30 mcg extended release capsules. So this is taken orally. You do not have to have an IV, which means it's going to be able to scoot around some of that problem that we're going to definitely see in the hospital system. It's going to get flooded. It's going to get overwhelmed. You're going to have healthcare workers go down. You're going to have just a shortage of beds. And so something that can treat people orally is going to be really great, I think. I really, really think so. If you don't believe me, go and check out the video that I did. I'll leave a card for it. It's on remdesivir. And congratulations to those guys. I know not everyone is so pumped about its efficacy. But one thing I thought about the other day with remdesivir, hey, when was the last time we heard some, patient come down with some spinal inflammation or some paralysis or some, terrible thing like that? So far we haven't. It really is safe. Now, maybe people, they want to throw stones at it. But, if your mom had COVID, or if you had COVID, you had a bad case, would you take it or not? Of course you would. Of course you would take it. Even if it only helped you a little bit, yes, you would take it. Definitely you would take it. We'll go back to the study. They have 160% participants. That's their estimated enrollment. They are going to be done February 2021, estimated study completion April 2021. And that's the end of phase 2. So you got to realize that they're not going to be done with phase 3 until third or fourth quarter of a year from now. So you have plenty of time. I don't think this is a pure COVID play like Revive is. This company has other things going on, including a possible acquisition. We're going to look into that. But that's just to get you guys started. I know a lot of people come for the COVID play, so there it is. Okay, Rayaldee. Oh, I forgot to say this. The reason this applies is because Rayaldee is very much related to vitamin D. And so, a lot of people are into the vitamin D. A lot of people are taking the vitamin D. I'm taking it. So it has something to do with that. We'll find out more when we look at their investor presentation. If you've not gone to coronavirustoday.com, it's a nice website. It gives you basically all the updates. It's like a web crawler, so to speak. I mean, it gives you all the updates of anything. If you go to Control F, you go and you type in Rayaldee, RAYALDEE, you get one hit, and it's from June 1st. It just says that the FDA announced that the OPKO could undertake a phase 2 trial of Rayaldee for patients to mild with moderate COVID. There's not a lot of other news, okay? So if you're having trouble finding stuff, it's because there's not a lot of stuff. You haven't missed it. Now, going over to BioReference. BioReference is a laboratory that's one of the arms or the departments, one of the segments of OPKO. Mostly OPKO, they're not really a drug company. I mean, they have some drugs. I'm not saying they're not. But if you look at it from a revenue perspective, most of the money that they're making, like 90%, one article writer says, is from their diagnostic side of things. So this says NBA extends community testing program as part of the 2019-2020 season restart in Orlando. We know we had the finals in Orlando. They had the bubble. Congratulations to the Lakers. Do you guys think Dwight Howard did anything? Is LeBron the GOAT? What do you think? But going back to this, we know that they were working in partnership with BioReference Labs, the league's testing provider on NBA campus in Orlando, Florida. The NBA provided free daily COVID PCR tests at a mobile collection site, and blah, 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 blah. And so that's how they did it. We go down to the bottom. It says the league is continuing its support of scientific research into more accessible testing through research partnerships with Yale School of Public Health, the Mayo Clinic, and other leading research institutions. The NBA support of expanded access to testing with Yale School of Public Health is focused on validating and obtaining FDA approval for the non-invasive saliva test, which is called a Saliva Direct. If you didn't see those other videos, yep. And so for coronavirus, that reduces test time and blah, 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 and costs. Okay, so there's that link, but there's no licensing deal. Definitely, it doesn't seem at all that OPKO has bought the rights, has licensing rights, anything. It just appears that they were running the PCR tests and bringing back the references. So I don't even know. I guess it's a saliva PCR test. I don't know. But anyways, I know you guys are curious about that. If you know more or if something else comes out, check the comment section. We'll all work together. Let's jump over to their investor page. It's more their presentation, I should say, which is not so great. It has a couple nice slides. A bunch of them are kind of fluff. But I do like this first one because we're talking about, is this a diagnostic or is this a drug company? They're making on Rayaldee about revenues. So sales, not even profits, sales of $8.6 million in Q2. If you go over here and look at the BioReference revs, it's $251 million. So it dwarfs the drug sales that they're getting. Now, they had some more. Rayaldee partnered with this other company. They got up to $787 million in milestones, which are like payments after the fact, with tiered double-digit royalties. Double-digit, so like 10 or above, and tiered. So maybe like a 17 at the first level of performance, and maybe like a 19 at the second level of performance. We can't exactly know. But Rayaldee partnered with also a company in Japan, up to $112 million in milestones, with tiered double-digit royalties as well. So that's the Rayaldee. It's already out there. They're making money. They're receiving those royalties. This quarter and last quarter, they had profitable quarters. They beat pretty good on revenue, but they had some extra expenses I guess people weren't expecting. And so at the end of the day, the earnings weren't all that great. It just was right in line, about 4 cents from what people were expecting. Now, the other thing they have is this drug, somatrogon, and it's for HGH. It's human growth hormone. They give it to kids who are deficient in this hormone, and it helps them, grow tall and strong and all of that. Now, they just got through phase 3, and they got it approved. They're partnering with Pfizer. Pfizer has a couple other drugs, HGH drugs already, and so we're going to learn more about that. But people are pretty excited. We're going to hear from a capital investing firm that's going to give us a great report, their thoughts, which I think think are much more interesting than an investor report that we're looking at here. But you can see the Pfizer to commercialize some with Trojan. So, okay, good, great. We'll see more of that in the future. Here's the technology. I don't know. Who cares? I don't know what that means. They tested it in 22 countries. Great. What else? Here's how the test worked, the phase 3 study design worked. But it got passed, it got approved. So this is a bit outdated information. Rayaldee, like we said, it's a kidney drug, and 25D3. This is the vitamin D. And there's better slides for this, so we'll keep moving. This is the FDA approval phase 2 study with Rayaldee in COVID patients. And they call it the rescue. It's kind of like a marketing little thing, I don't know. But it's Rayaldee extended release capsules. And this is the name for it, the CALCIFEDIOL, if you want to go hunting for some like academic articles upon, is how effective it is, different literature that's been written on it. But the basic idea is they're going to load the patient up over 3 days, over a period of 3 days, 300 mcg a day, and then 60 mcg a day for the next 24 days. And okay, they have endpoints, and we're just going to have to wait to see. I have no idea how many of those 160 patients they have already enrolled. I haven't heard any stories. So please share if you know more. Here's what we're looking at with the HGH. They're working with Pfizer. They're through with phase 3. The other things they have going on is so $0.6 billion. That's like a $600 million opportunity with hemophilia, but it's going into phase 2. We got 2 other things that are preclinical, and this is a $2 billion market size. Okay, that doesn't mean that's what they're going to make. They maybe get a portion of that, but they're not going to get the whole pie. What else? This is kind of fluff. They treat 17 million different patients on their testing. They are a huge testing company, and we'll see that here in this article coming up, written by Sion. But basically, 10 hospitals at this 10 hospital group, Westchester Medical Center Health Network. They do about 7 million tests a year. So I think they're well positioned to do a ton more tests, and they have an amazing capacity. We're gonna look at that because that is actually probably one of the biggest highlights I've seen. Okay, you can get your results on your phone. Who cares? It's not a cutting edge anymore. They have different testing centers in New Jersey, Melbourne, Florida, Gaithersburg, Maryland, Houston, Texas, and Campbell, CA. Now this is the really interesting slide I want you guys to check out. So they did a PCR and they have an antibody turnaround. They say they can do it in as fast as 6 hours if you pay, I guess, probably more for the priority. But in general, it's going to take 3 days to get your results back. You got to actually send the test to their lab. They performed about 5.3 million PCR tests as of September 13th. They had the capacity to run 70,000 PCR tests a day. So that's a huge amount, right? Although this is a very impressive number. We know that it broke out, say, like March. So we'll say like about 6 months. They did 5.3 million. I wonder what, let's see, there's 30 days in a month, say, times 6 months, times 70,000 a day. So they could do, they could have done 12.6 million, and they did 5.3 million. So they have a ton of capacity. That's only for 6 months. You double that, they could do like 25 million tests a year, which is amazing. And then capacity to run 400,000 antibody tests per day. That's crazy. 365 times 400,000. Jeez, man. Is that right? 146 million a year? Anyway, so they're partnering with New York, New Jersey, Florida, multiple cities, municipalities, hotel systems, operating more PCR collection sites than any other commercial laboratory, and they're highly visible. Most of us heard about them from the NFL, the NBA, Major League Soccer. So, now one thing I wanted to say is you gotta always keep your eye on the competition, and we do have a coronavirus. FDA authorizes first diagnostic test using an at-home collection of saliva specimens. So, one thing I really got into, like Sorrento Labs, and that company, I do not know what's going on with that company. They were just at like $11 or $12 a share. They're down at like $7. And people on that investor group, people are like Man, this sucks. Every time they say that their CEO, Dr. G, gets on the call with somebody, with Kramer or whoever, it's like it just takes a nosedive. They are dragging their feet big time. They are loading up on all these patents, but no one knows what's going on. The shares are just getting hammered. But they had a saliva test, and I covered them before. Well, another company out of Utah, we've talked about them before, Spectrum Solutions. They're a private company, so sorry, don't waste your time trying to pick up their shares. But they have the LLC, private, so SDNA 1000 saliva collection device, and so they got the FDA authorization, EUA, to do it at home. And so that's pretty big since it's the first diagnostic test with an at-home collection option. Collection option. Permit testing of samples self-collected by patients at home using the machine, the collection device. So I guess you could still got to send it off though. Yeah, I bet you they still have to send it off, it looks like, as far as I can tell. So moving on, let's look at some technicals. So we're going to try to trade this or not. We'll look at the technicals in the 1 day and the 1 month, 1 week. Neutral on the 1 day, but okay. 1 week, it's a sell. It's not looking too hot. You can see. I'll leave it like this so you can see it. If you go to the 1 month, it changes to like a buy signal. Those are the oscillators. Those are the moving averages. That makes it easy for us. Now this one interesting. The chairman and CEO of OPKO Health, his name's Philip Foster. He just spent about $2.1 million buying a few more shares, and he picked those up. Knowing all that he does, he picked them up for an average of $3.45. Yeah. The other thing they give us is a nice chart about the insider buying. You can see on the 0 to 3 months buys, 3 to 6, 6 to 9, and 9 to 12 months out. A lot of buys, they're not selling. So I don't know what they know. Obviously they know a lot more than we know, whatever that is. Here's something we saw. OPKO Health loses 16.2% despite in-line third quarter earnings. It says it fell the share price after earnings came out. They said they had 4 cents a share profits, and one thing they said is that the third quarter revenues were 4 to 8 million. It outpaced Zacks' consensus estimate by 14.1%. If you go down to the bottom, it says summing up, OPKO exited the third quarter on a mixed note. Rayaldee has contributed significantly to the quarter under review. Further, the company's utilization of the 4K score remains strong. Also, the company witnessed strong performance across 2 of its segments in the quarter under review. So that's a lot of positive information. Anyways, we're going to look at this 4K score thing, but I like this. Furthermore, BioReference Laboratories' COVID-19 testing volume witnessed a significant increase in the third quarter. Despite all that, gross margins, they have bad margins. And one article we're going to look at is basically going to accuse the leadership of mismanagement. And their margins suck. We'll see that later, but we'll see it here as well. They basically say that there's other companies in the space that are better. Thermo Fisher said beating the consensus estimate on the EPS by 28.8%. So our 14% was on revenue. This is on EPS. So they're different things. It says Thermo Fisher only beat revenues by 10%. So, you can make an argument, I guess, both ways for it. And they talk about some competitors, but it's just interesting to know. Now, we see from Keith Spates from time to time, October 30th is when he wrote this, why OPKO Health stock is tanking today. He basically said stock was down 18.5%. He said the company reported third quarter earnings, 4%, narrowly missing the consensus estimate of 5 cents. I said 4%, it's 4 cents and 5 cent estimate. He goes on to say that they really blew the third quarter revenues out of the water. They brought in $428 million, blew away the analyst's estimate of $376 million. So they did great, but they didn't do so great on earnings. That means they spent a lot of money somewhere that no one was expecting. Now he goes on to say probably the best explanation for the enormous amount of skepticism. There's evidence by a short position of float for the healthcare stock at a sky-high 32.7%. If we go back over here to FinBiz, float 32.59. So that is correct. I do not think this is correct. Insider ownership is not 1.4. So just keep your eyes on that. But because they're trying to get like 50% ownership. They already own like 30%. They're trying to get 50. And one author talks about that. So FinBiz screwed us on this one right here. But that's okay. We still love them. They're cool. They're good. We like them. All in all, good stuff. So Spates, he goes on. He says, look, one thing we got to know is there's this activist investor, Scion Capital, issued a press release Thursday evening pressuring OPKO to consider several options, including a sale to go private. Now, if you were paying attention, you saw the Piedmont Lithium Company when Tesla announced they were going to acquire them. Through the roof. I don't know, it was like 6x, maybe it was only 3x, maybe it was 4x. Maybe, I don't know, it was a lot, a huge jump. The other thing we saw, there was a company recently that Gilead Sciences acquired, I think like Immunodynamics or something. Those shares were purchased at almost a like 90% premium. I think it went from like 40 to 80, something around there. So huge premium. So if this thing gets picked up, goes private, if these shares are bought at a premium, that could be an interesting thing to think about as kind of an extra option for you. I'm going to go ahead and read this. This is from these folks from Scion's management, portfolio manager, and it's long, but I'm going to read it because I think it's important. I would say you definitely want to understand this and read it more than once if you're going to buy this stock. So let's go. A summary of Scion's detailed presentation is as followed. No, I want to read this. It says OPKO stockholders have been forced to endure billions of dollars of losses due to, in our view, leadership's misstep, poor communication, and self-interested decisions. Rather than take prompt steps to increase shareholder value, we contend that Chairman and CEO Dr. Philip Frost and company's leadership team have ignored high potential opportunities in the marketplace and demonstrated an inability to unlock the true value of the company's prized assets. In addition, we believe Dr. Frost and his associates have given disinterested stockholders cause for significant concern by filing for approval under the Hart-Scott-Rodino Antitrust Improvements Act to increase their ownership to more than 50%. See? I told you. And by purchasing stock at all-time lows, frequently from January through June. Now, it's time for OPKO's leadership to honor its fiduciary duties, to quickly move to deliver the value that long-suffering investors deserve. These guys are taking off the gloves, are they not? Putting it right out there on Global Newswire. So, Scion has spent months conducting industry research, holding conversations with ex-employees and consultants, and engaging with potential acquirers for OPKO's presently undervalued assets. We have provided OPKO with a roadmap for success and tried, sounds like it didn't work out very well, and tried to sustain a productive dialogue. It's time for a viable, value-enhancing roadmap to be implemented at OPKO. So they are looking for potential acquirers right here. Engaging with potential acquirers, okay? So they're basically trying to scrape up some money in order to buy this thing and then flip it. That's how I'm going to read this. So we believe BioReferences, which they're going to call it the BRL, is worth about $3 billion to $6 billion, given its true annual earning power is between $300 million and $400 million. Now, we already know this company has a market cap of $2.5 billion. And they say that this one segment alone could be worth twice what the company trades for. Alone, not with any of the drugs, just the BioReference side. Now, here's what else they have to say. And this is interesting because we're going to find out a bit about the growth rate. But they said COVID-19 serology testing revenue in third quarter 20 will be over $200 million, while BRL's base business has recovered more rapidly than their competitors, Quest and LabCorp. BRL's fourth quarter COVID-19 revenue will increase over 20%. Over 20% growth rate on that thing. So that's interesting if you're going to build something into the model. To over $250 million. Other things, BRL's base business will grow about 10 to 15% for the foreseeable future. So that's a sustained growth rate. It's pretty good. They have GeneDx, Oncology, and Women's Health are the three fastest growing divisions in the industry, which comprise 40% of BRL's business, growing an average of 15%. Now, they say if the remainders of the business can grow just half of that, then a 10 to 15% overall growth rate is highly achievable. Now, BRL has significantly increased insurance coverage, recently becoming one of just 5 labs and one of just 3 national labs with scale to be selected for United Healthcare's network. BRL also recently won an in-network contract for Humana and Blue Cross Blue Shield in Texas. Now, Quest has come up with some numbers, and they said that they're looking at a $4 billion opportunity with this COVID testing thing. Now, Quest thinks that they're going to be able to capture 25% 25% share is what they're saying. So they anticipate that that's going to be worth about $1 billion of growth in their revenue. Now Scion says, okay, if BRL achieved just half of that, this would unlock an additional $500 million in revenue, and that's like more than 50% of BRL's entire revenue base from a year before. So that's why I said there was two things. We got to remember, say they're making about $1,200 million in sales. This is a extra $500 opportunity, and we're going to go down a little bit lower. There'll be a $200 million opportunity here. This is on profits though. So anyways, we'll get to that. BRL has signed multi-year significant strategic partnerships with, among others, Pediatrics Medical Group, a 2,200 nationwide physician network, Westchester Medical Center's 10 hospital network that conducts over 7 million tests on a yearly basis, exclusive partnership with the NFL, NBA, Major League Soccer, as well as government contracts with Centers for Disease Control and Prevention to test weekly 950 schools and all 950 schools, not kids, 950 schools in New York City, and to test all 50,000 New York MTA employees on a weekly basis. That's a lot of tests. Now, last quarter BRL's profit margins were about 10%. Yeah, they have really awful profit margins. And Quest and LabCorp had about profit margins somewhere around 27%. So they say, look, if BRL is managed better, if BRL only made up half that difference, BRL's annual earnings before interest, taxes, depreciation, amortization would be about $400 million a year. Would be greater than $400 million a year. Well, we saw in that thing before they had sales of about $250 million. You remember that slide? You can go back if you forgot. But it was the one where Rayaldee was selling about $8.5 million in sales, and BioReference Labs was bringing in about $250 million in sales. So these guys says, look, you just manage it better, and you can squeeze another $150 million out of it easy. That's like a, I don't know, 40, 50, what's 150 on 250? It's a lot, like 60%? 50%, yeah. So anyways, moving on, Supplementation drug, they're going to look at that. They say it's the human growth hormone crown jewel. They say that thing could be worth $2 billion by itself. They said Pfizer paid OPKO $600 million up front for They say Pfizer paid OPKO $600 million up front for OPKO to complete clinical stage trials all over the world, 24 trials, 83 countries from 2017 to 2019. And Pfizer announced just a few weeks ago that the trial had passed phase 3. Pfizer also discussed Supplementation 2021 launch on a recent earnings call. So they're going to launch it. They're going to monetize it. OPKO is owed, this is important, 20% royalties on both of Pfizer's current HGH drugs. Those things sell for about $500 million. Okay, so that's $100 million right there. The royalties these are other drugs. And then they also get, looks like 20% on sales of Supplementation and an additional $275 million in milestones. So that's going to be great. They estimate that this will produce an annual profit stream of $200 million. So this company is barely making money, and these guys are talking about profits of $200 million. That's nice. They go on to give us some reasons about they had this competitor. There's only one. It hasn't ever commercialized a drug. They say that this thing, is just great because they have the orphan drug status. It gives them at least 7 years in the U.S. and Europe, and you can get an extra 5 years add-on of protection for competitors coming in. It's like an optional add-on for that extra 5, but at least for 7, so 7 to 12 is how they come up with that. And they say, you know what, we're in a drug industry, there's really low, opportunities like this. People would gobble it up, basically. They say $2 billion is an extraordinarily conservative number. And, so they just think that, they'd probably basically just sell that thing off, or do whatever, pay it out to the highest bidder. Anyway, they think it's worth a lot. Anyways, so that's the article, and it's really interesting. So going over Motley Fool, OPKO Health grows revenue by 33% on the back of its COVID-19 testing. Now, I really like this article. It gives us a couple things. One, it tells us that a lot of the growth came from the diagnostic side. We also learned a couple things. It says revenue at OPKO rose 33% year over year in the second quarter as the test maker sold 2.2 million of its COVID-19 molecular tests. Okay, so that's in the quarter. We're talking about quarter-over-quarter comparisons, okay? So that's very important. I'm going to show you later they sold these at $100 a pop, and we just saw in that other article that they are talking about putting a 20% growth rate on that in the fourth quarter. with different numbers like 15% sustainable growth. So you can, if you want to build a model, those are the numbers you need. You need to know the price, you need to know the volume, and you need to know the growth rate. So there's your volume, 2.2 million in a quarter. You got your 20% growth rate, and I'm telling you, I'll show you here in a second that they're selling for $100 a pop. Now, the other thing is they had this other thing, the antibody test, and they sold, let's see, in April. They launched it in April, late April. So that's like so you got January, February, March, that's the first quarter. You got April, May, and June, that's the second quarter. So late April, so about, a third of the way into the quarter, they launch this thing, and they sell 330,000 of them. Now those are going to sell for $55 a piece. So you can do the math on that if you want to do the revenues. The other thing I like about this article, while drug sales account for less than 10% of OPKO's total revenue, there's potential for that share to expand dramatically. They go on to basically argue that the vitamin, sold as a COVID therapy would, change the balance of power within the company, right? But like I said, that's a long ways away. They're not going to get approved from that if they pass, if it is effective. They're not going to get approved for that until the end of 2021. So you got a lot of time on that end. If you want to buy now, you're buying for the testing. That's what I'm going to argue. Because it's going to be a while before any of that Rayaldee stuff for COVID is going to come true. Now, you might want to buy it now and wait for this acquisition. Maybe Scion scrapes together that money. Maybe people really are looking for lucrative, investment opportunities, given maybe other opportunities or a lack of other opportunities. We could say it like that. So about reference, if we go over their page, services about 11 million patients annually. We already knew that. So before we go over and look at those prices, just want to look at, they have on their website our technology. They have this carboxyl terminal peptide. There's a lot of kind of medical tech speak on this, but yeah, I have no idea. As an investor, if this is going to be worth any money. They have a reversible PE glycation, and they have something called an antagonate. It's a molecule designed to interfere with the regulatory gene expression in order to enhance production of endogenous functional proteins. So, I mean, who knows? The other thing that is interesting, they have this Claros 1. It's a device, point-of-care device, benchtop diagnostic instrument designed to provide rapid quantitative blood tests in 15 minutes right in the physician's office using the finger stick of whole blood. And they got FDA approval in January of 2019. Now again, is that a great breakthrough machine? Is that, I don't know, is it good at all? I don't know. But it's something to know about just because we're looking at what they do. This is also interesting. At this point, when I'm looking at this website, I'm a little bit like, you guys need to find a core competency and stick to it. So that's one concerning thing with me, a platform technology, C-terminal peptides. Okay. I mean, I don't know. High-potency compounds are a subsidiary. Eirgen is a leading developer and commercial supplier of specialty medicines to meet the global market. Eirgen provides versatile, price-effective, and efficient solutions to pharma partners seeking to collaborate in pharma healthcare. Eirgen is a trusted supplier of high-quality, safe and reliable, life-saving, high-containment medicines in more than 50 countries worldwide. Are they good at that? How much money is that? Is that a great segment of their company? Or are they going to chop that thing off next month? Are they economically profitable? I mean, do they have pricing power? Do they have any competitors? Do they have, is it a growing industry? We have no idea. Branded generics in Latin America. These are generics. I mean, okay, branded, but our subsidiaries in South and Central America commercialize and distribute hundreds of branded medical products in the Latin American region. These companies are focused on delivering value to our customers through superior quality, attentive service, and affordable prices. Who knows? I mean, I don't know. And this is the thing that really made me kind of wrinkle my brow and say what is this? Animal health? I don't know, man. I don't know. Irish-based subsidiary, Eirgen Pharma. I don't know how different veterinary care products are. Maybe, but it seems, I was surprised to see that. I'm going to go over real quick and show you those numbers from the BioReference Labs on the price points and the turnaround time. Molecular test for COVID. This was the one they had 2.2 million in the second quarter that they sold of these. I'll show you it has a 3-day turnaround time. So it's not like a 15-minute antigen test like Quidel, like Becton Dickinson, like Abbott. Or like Access Bio that also has FDA, EUA approval out of South Korea, can do it in 10, faster than all them other boys. And but these guys take 3 days. Okay, so it's just a different way to do it. They can do a high volume, right? Millions of these things, but you gotta wait. So I don't know how good that is for hospitals. I mean, if you're a doctor and you're like, does my patient have the flu or does my patient have COVID? Can you wait 3 days? I don't know if you can. I don't know if you can. Maybe you can, maybe you can't. The thing on this, it's $100. COVID-19 self-pay price is $100. They might upcharge that for insurance companies. Could be. But if they did 2.2 million, they did 2.2 million, right? And if they're $100 a piece, 220 million bucks that they can make on that per quarter. It's pretty awesome. We go over here, serology, COVID-19 exposure. This is the antibody test. You can see that there. The turnaround time on this is also 3 days. So way slower than Quidel, Becton, than Abbott. This one's $55 a pop. All right, and remember that they did, let's see, they did like 330,000 in a 2-month period. So let's say they could do like 500. Yeah, let's say they could do like 500,000, full, if they had the full quarter to do it in, the full 3-month period. 500,000 times $55. 27.5 million on that thing. So anyways, you can run those numbers and you can look if you want to build a model. It wouldn't really be that hard if you had the growth rates. And so that's really about it. I mean, I don't have much else to say. Just know that they're not doing the saliva direct test from Yale, even though they say that both of those things were involved with the NBA and all that stuff. They're not really working together. There may be a buyout. We'll see how this company does. I would say it's mismanaged. I mean, their profit margins are really bad, and even gross margin 38%, operating margin, profit margin. These are not good, So you can compare them to those other companies. You could go and look at Quest. But I did really like the idea that we got from that Scion report that they thought that those drugs were undervalued, especially as big as it is. And the thing that I really, really loved, I think more than anything, was when they talked about their capacity. They can crank these things out. I mean, they can seriously get after it. If they can do 70,000 a day, I just want to do that again. 70,000, you got 30 days. In a month, you got 6 months. So they could have done, yes, 12.6 million. They did 5.3. So they're only at like 42% capacity. I mean, they could double their output on those PCR tests, and they're making $100 a pop on them. And then capacity to run 400,000 antibody tests a day. That's just a massive number. And Gottlieb, he thinks like half people are going to have it in America by Christmas. 40 to 50% of Americans are going to have had it by Christmas. So it's going to be a rough winter, for sure. And I think these companies are going to test like crazy. So I think it's interesting. I don't know why, all the shorts, all the short float. I thought it was going to move more, more significantly up. We'll see what happens if this Joe Biden thing. Some people were saying, look, like people at Sorrento, they were saying, well, the administration, the government doesn't want a bunch of testing to happen if it makes the Trump presidency look bad. You're trying to win re-election. The more sick people, the worse it looks, right? So, but now we're past all that, I suppose, I hope, I don't know. And maybe whoever wins it, what do they have to lose? They're going to test like crazy. And so that's my thoughts. Hope you guys enjoy. Let me know if you have any thoughts. We'll talk to you next time.